Okay, everyone, welcome to Market Monday. I am here with Phillip Morrow from AMC Mortgage. And basically, what we're going to talk about is everything you need to know about getting a mortgage and the process that comes with that and all the qualifications needed and everything like that. So, being said, I'm just kind of going to let him go and I'll interject wherever I need to.
Perfect, perfect. Well, yep, my name is Phillip Morrow. I also go by Philip Allen Morrow because my dad's also a lender, as most people know. So try to cut down on confusion. We throw the middle name in there, but I am a second generation banker. Been in it since college. So went to the University of Arkansas and then jumped right into lending. Was with BOK for a bunch of years, and then I've been at AMC along with my dad for the last four. So we've kind of got the ability to see it all over the last, I don't know, decade or so of lending. It's
It's
been a
cool
lot
to
of fun.
work with your dad, too. That's awesome.
Yeah, I've worked with my whole life. It's crazy. Yeah,
So cool.
it's hilarious. Um, a little bit about our company. So AMC Mortgage has been around for about 25 years, and we do everything under the sun as far as lending, from that jumbo product up to $2 million to that first time home buyer needing down payment assistance and everything in between. We even actually offer construction loan programs. We just don't have them right now during these COVID times. So, but we had just actually rolled it out in March and then shut it down in about May. So it will be back. But down payment assistance, VA, FHA, conventional, rural development, the Native American loan. We've got them all.
Oh, great. So yeah, you've even got the HUD 184, which is the Native American one.
Yep, absolutely. So, and I always tell people, a lot of times you'll hear, especially with, just a more mature crowd, you'll hear, oh, FHA is worse than conventional, or conventional is so much superior to FHA. And that's not the case. Back in the day, it was. But in this day and age, it's what's best for that client at that time. So sometimes FHA's the golden goose. Other times, in other situations, conventional might be the better fit. It's just case
Now
by case.
conventional down payment is pretty similar,
It is.
pretty similar to the FHA, so it's
Correct.
close.
Correct. So yeah, on conventional financing, we could do as little as 3% down if you're a first-time home buyer. And what's a cool kind of trick is, let's say hubby and wife buy a house together. She owned a house. They get married. Now they're ready to move on to the next one.
Yeah,
He's technically a first-time home buyer, so they can do the 3% down.
that's cool.
So
No, I
there's
didn't know.
just those cool kind of nuances in with the program that can work out. It's pretty nice.
That's awesome. Cool. I'm trying to see what is next on our
So
list.
the lending process. So just kind of a quick overview. We'll kind of make it a quick one because you could get
Okay.
as detailed or as into the weeds as you want.
I know.
But basically,
I sent that.
I was like,
This is gonna be very vague.
no, I love it. It's great. So essentially, right now with what we're seeing, especially in this market where it's really shifted from a buyer's market to a seller's market, getting that pre-approval process started early and supplying us that documentation on the front end is making a world of difference. As now I'm able to reach out to a selling agent, say, hey, John and Jane Doe are well qualified. I've already verified assets. I've already verified income, and I've already verified credit. So essentially, it's as good as a cash deal. They're just using my cash.
That's awesome.
So we're really stressing in this mortgage process more than ever. When you get pre-approved, go ahead and submit those pay stubs, sign that borrower authorization form so that we can do a verification of employment. Because now we've really taken it from just a pre-approval letter to a pre-qualification letter. You've got a real deal here. And that kind of cuts down too on also unforeseen instances. We've all seen them in the business. We're good to go up until that day before, and then something changes. It's
Yeah.
usually income driven.
Right. Okay.
Usually,
Well, that's good to
and
know.
yeah, and it's not like someone's like saying, hey, I'm going to try to pull a fast one over on this mortgage company. Not at all. It's they just think that, they get used to thinking a number they make, they put it down on paper, and then and let's say instead of it being 4,000 a month, it's 3,700.
It makes a
Not
big
that big of a difference. But if you take it over 12 months, it can really change someone's ability to purchase.
correct.
So those are kind of those things you see, a part of the process that our company really prides ourselves on to avoid those kind of obstacles.
That's awesome. Yeah, because well, and I know that just kind of gives you a competitive advantage and a leg up, in these multiple offer situations. If you can provide something saying, "Hey, I'm basically good to go. You don't have to worry about me." That's a big step up.
Oh yeah, and I've even seen scenarios right now where doing a loan is better than doing a cash deal for this reason. If a buyer comes to me, does exactly as we ask, you get them. We verify income, we verify asset, we verify credit.
Mhm.
They go shopping. Let's say you find them a house over in Holiday Hills. Okay, they're putting down 20%.
Right.
Odds are all but certain I won't even need an appraisal. So now doing lending, we've actually one step less needed than a cash buyer. Cash buyer is still going to want to do an appraisal, but because the buyer's putting down 20% and that area of town, the comps support that value, so an appraisal is not needed. So now all we really need is title work.
That's awesome. Okay.
Yeah,
I've never
it's
thought
really cool.
about that part before. Cool.
Yeah, we're seeing that more and more. You know, Legends neighborhood, Traditions, Maple Ridge. I mean, you're kind of more known neighborhoods.
Mhm.
Tulsa in the metro, a lot of them, we're just seeing it more and more now because there's appraisal waivers. And it's not just our institution. I wish I could say it was just us,
Yeah,
but all the guys in town are doing it.
that's smart. So okay, so first step is getting with you and getting all that documentation
Yep.
done and ready to go. So what's next?
Next, shopping spree.
Okay, awesome. That's
Go
that's
pick
my
out the
part.
house. Yeah, exactly. That's the fun part.
Yeah.
Yeah, I like to knock out the boring stuff first, then go on the shopping spree, find that house. And then if you can during these times, we like to see 35 to 45-day closings. We know that's hard with competitive negotiations and offers and everything, but if we can get that time, we can always shorten it.
Okay.
So we set a 35, 45-day contract, and then we find out we don't need an appraisal, or we find out title work was already done maybe on that
Right.
property. I'm all in and moving closings up. It's
Yeah.
just, I always hate going the other way.
Yeah.
Set those expectations. It makes it a little stressful at times on
I don't
my
know if
sellers or
I've seen them faster than 30 days right now. I'm not
yeah,
gonna
yeah,
lie.
and that's just it. It's like I wish I could, because I mean I'm all about getting them done. Time kills
Yeah.
deals, so I don't like that. But I do know title companies, bless their hearts, they're working their tails off right now.
Yeah.
I mean, we're getting emails at midnight, 1 a.m. So they're just at capacity.
Yeah. I
So just
see it. So
when I get a 30-day, I go, hey, let's have a plan B, because I don't know. We're gonna try.
yeah. I know. I haven't seen very many of them recently. I won't
Yep.
lie. Okay.
Nope, for
So
sure.
shopping spree. And then
Yep.
what happens next?
Under contract. So now you're under contract. I always love for my clients to come see me at least once. COVID's obviously changed that a little bit,
Mhm.
but we did find a crazy correlation between on an experience basis if they would just come see me once they went under contract. So they go under contract that weekend. They come see me Monday, Tuesday, Wednesday that following week.
Mhm.
Bring in any additional homework assignments I request. Maybe it's an updated pay stub, a bank statement. Sometimes it's just letter of explanations. Hey, we're going to keep our current house, or we're going to sell our current house. It's just not listed yet. Those kind of things. But then we also pull it up on the big screen and go over the facts and figures. 3 parts to make the amount due: down payment, closing costs, prepaids, what the seller can pay or what the seller is paying, get the taxes in. Also, we always provide our clients a quote for insurance at that point, just
Oh,
so they know where I came up with the number. Because
okay.
I'm getting title estimate from the title company direct. I'm pulling taxes off tax records.
Okay. Are you there?
Yep, back. Sorry, someone just called it. I pull tax off tax records, so I've got that number. So my only variable, oftentimes within the first 5 days of a contract, is my insurance.
Okay.
So instead of just pulling a number out of a hat, now I'm old, so I've been around long enough to be pretty darn close. But I go ahead and get an insurance quote just to make sure. Hey, here's my number. Use whoever you want, but just so you know where I got the facts and figures, here you go.
You're not just making
And
it
then
up.
from there, yeah, exactly. I'm not just trying to seal the deal on this one by lowballing on insurance. It's actual
Yeah.
quote from a reputable agent here in town. At that point, too, that allows us to order the title work and the appraisal. Okay, so those two go out simultaneously. At that point, you guys are going to do some inspections, make sure the house checks out there. If
Mhm.
there was an issue, that also gives us time to go ahead and stop that appraisal. I always tell people 3 parts will be paid out of pocket: appraisal, credited back at closing; earnest money, credited back at closing; and inspections. Your true skunk cost, you're not going to see that back, but
Right.
it's the most, I don't know, up there
Most
on the
important.
most important things.
I
Yeah, don't want
agree.
to limit. So
Totally
it's worth the
agree.
money.
Yeah. Totally agree.
Once all that's done, file goes to underwriting. We get conditional loan approval with, let's say, hey, we need an updated bank statement, um, letter of explanation. I mean, maybe a W-2 from 19, something like that. Okay.
Okay.
We're going to pair that with that appraisal because it comes back at that point, as
Mhm.
well as the title work comes in. So now I've got clear title, appraisal checked out, conditions from buyer, we go back to final underwrite and get our clear to close.
Okay.
That process, I mean, you could just hear, I mean, that was a really simplified version,
Yeah.
but we still had 10, 15 different people touching the file.
Right. Right. And the underwriting part is always like the scary part. I feel like for the buyers, like they're like, oh my,
yeah,
it's in underwriting, but it's nice to hear you have it like explained that way where, it's more complicated, but it's really this simple. They need this, and they need this.
Yeah. Basically on a pre-approval, you're going to tell me a story and my underwriter is going to be like a detective and they're going to make sure the information you told checks out.
Awesome. Okay. I mean,
so yeah, that's the easiest way to say it. It's like, hey, and I tell clients this all the time. I go, it's not what you know, it's what you get, what I can prove, because
right.
I can't take my story and put it in the file. So I got to have the documentation to align with the story we told to make sure someone in Nebraska can read this thing.
Yeah, I mean that it makes sense. That honestly, that makes even more sense for me too, hearing you explain it that way.
Cool, good, awesome.
And then after that, it's just everything goes well, everything's good to go.
Yep.
Closes after that, right? So
Yep. We get our clear to close. We send a celebratory email kind of going over your final, like, hey, here's where we're going to close, break the champagne, get it going, have a party, keys exchanged, funds wired, done deal.
Good to go. Okay. And something I want to drop in here personally from dealing with you, your company does like a weekly update on where the file is. And they send out an email to everyone, and basically the buyers or sellers, the people involved, saying, this is where we're at. And every week. And that, to me, that's awesome, because that helps me out, because I'm always the one having to be like, well, let me figure out, like, let me call them, let me do this, and for you to send that out and be proactive and tell them, hey, this is where we're at. We're in underwriting, or we're in appraisal. Like that's a huge help.
Yeah, no, it's been, so I've been doing that for about 10 years, and actually a competitor of mine, a guy I do respect in the business, I've known him my whole life, told me years ago, he's like, hey, do this. I'm going to tell you because most people don't do it. He goes, I tell everyone, but nobody does it. So I said, I'm going to do it.
Yeah.
And it has been probably one of my most talked about or appreciated things with my referral partners that I do is, it cuts down on you having to reach out to me and take 5-10 minutes of your time. And then B, gives you a little piece going into the weekend, like, okay, Morrow's team's got it. Nothing to think about here.
Yeah.
On to the next.
Honestly, it's great. I that was definitely my favorite part of the process, because
cool.
it cut out a step for me, every week. And not that I wouldn't do it anyway, but it helps ease the minds of your buyers who are nervous, so.
Yeah. Well, especially like, when you go from that contract to close, there's 30 days there that oftentimes you and I don't have to speak. So
right.
when you got some stuff going on, it's like, okay, wait, hold on. What are the Tylers doing? Where are we at in that? Okay, Morrow sent that email. Okay, that's not anything about the Tylers. Right. Okay, what's the next one? So yeah, it definitely keeps things moving a little smoother.
Yeah, it's great for sure. Okay, so next on our list is pulling it up.
What to do to get ready to buy a home?
Yeah. Okay,
I love this one.
I have people ask me this all the time.
Yeah. First thing I tell everyone, I always say, in the mortgage world and in the medical world, you want to be boring. The more boring you are, the better it is.
Yes.
Now, a lot of times people get, and I'm just speaking from experience, like when we had our baby, I remember I was so scared to go to the hospital. Like I remember asking the doc was like, hey, any questions before the big day? My wife, said no, because she's a pro. Guy looked at me, said, Dad, what about you? And I go, how do I get to the hospital? And he kind of looked at me kind of crazy, and he's like, you just go on Yale, then you'll turn into the hospital. I go, okay, yeah. No, like I need to know, how do I get to you when my wife is screaming because she's, in labor? Where do I go when I get
I need to be prepared for this.
Yeah, I want to know exactly what door I go in. Is it door A, B, or C? Like, where am I going? That's awesome. And so I say that to say the mortgage game the same way. Like the more questions, when people say, how do I get prepared? Apply with me and let's just talk. Because oftentimes people either A, think they're far worse than we are. We always think the worst.
Right.
And then it's never really that bad. And then, or two, there is an issue that we got to work through, but I still have yet to find an issue that doesn't have a solution. Okay. Maybe they're there. I just haven't found them yet. So if there is a problem,
maybe time.
Mm-hmm. Oh yeah, absolutely. Yeah. Absolutely. So we have the software running. Let's say a person's credit score is a little low for qualifying. Like we want to see that score at about a 620, 640.
Okay.
There are institutions in town that'll go down to a 600. And as soon as these COVID times have passed, we'll go back down to a 580 even.
Oh,
So just during these COVID times, we are seeing some overlays with some higher credit requirements. That's just investors protecting themselves, really.
makes sense. I
Can't
mean,
fault them for that.
yeah,
Exactly.
yeah.
But so let's say a person has a lower credit score than needed. What we'll do is they'll apply with me, and then I have the software to say, hey, if you do X, Y, and Z, your score will jump X points to put you in a position to qualify.
Okay.
And it may require them to wait 3 months, do X, Y, Z, and wait 3 months. But oftentimes it's do X, Y, Z, and their score immediately jumps.
Oh, wow.
Then I just do a rapid rescore, and they're good to go.
Wow, that's awesome. That's good to know. Because
Yeah.
that, that is a question that's asked a lot is like, well, I don't know if my credit's right there. And they don't really want to come talk to a lender till they're ready. For some reason, they're like so scared of you guys.
Oh, I know. I'm like a dentist, like an
But,
uneducated dentist.
hopefully, putting a face to a name can and explaining the process can kind of ease the minds of people who are watching this and seeing this and everything
Yeah.
like that.
Yeah. So I agree 100%. So yeah, mainly is just get with me. Let's talk it out. And because oftentimes I've even had clients spend money to get their score up. Like literally one time I had this young lady, I'll never forget her, really cool lady. She had like a 610, young, didn't have bad debt, just didn't have a lot of it. So we
Right.
didn't have a lot of history for her to have a good score yet. So she had a credit card and then she had another card that she just never used. The system told her to go spend $10 and her score jumped like 40 points.
What? Just
I
because
know. It was like
she hadn't been using that
yeah,
card.
yeah. She just needed to use the card. Like, it's,
So crazy.
your mind would tell you, or logics would go, hey, I need to pay down this credit card I have. No, I just spend money on the other one. Because that just created good history. So we had more of a detailed report.
Okay, that makes sense.
Yeah.
This world is backward from the way our brains think. So
Yeah. When you think mortgage, take logic out of it, and then you'll get closer.
and just call you.
Yeah.
Just
First
call
and
you.
foremost, call me.
Cool.
Exactly.
Okay. So the process is just get with you, and you will, help them do whatever they need to do to get ready, basically.
Yep. One
Cool.
other thing I would say,
Okay.
I would say the other thing we see, a lot of people will call, we don't see it as much as we used to, but people have mattress money, meaning they just got maybe a safe in their closet, or they stash money under their couch or whatever.
Yeah.
Banks can't use that. It's
Okay.
crazy to say banks can't use cash. We want to source everything. And that
Got it.
all came after 9/11. So what we want to see is we want that money in the bank. So let's say a couple, guy or gal, going to want to buy a home and they've got some cash in the mattress. Advise them to get that cash, put it in the bank, and let it season for 60 days.
Okay.
Once that money is deposited in that institution and held for 60 days, it's their money as if it had been there for 10 years.
Good to know. Okay, that's another good
Okay.
tip. So, um,
No
remind.
cash.
And does that come into play? Just curious, like with wedding money, like how does that work? Because I know a lot of new couples. How do you do that?
Great question. So a couple's getting married, they're going to get some donations. Actually, what we've done before is just get a copy of the wedding certificate, or
Okay.
like their marriage license. There it is, and maybe not deposit all that money individually, to just deposit all at once, and
Got
then just
it.
get one gift letter from a family member.
Perfect.
So the wedding is a little different. There are some actual options, because I thought that same thing. It's like,
Yeah.
oh man, you have like 100 deposit here, maybe a couple hundred deposit over here, a shower. But no,
Just kind
we'll
of hold
walk them
on to
through
it.
that.
Got it.
Just
Okay.
deposit all at one.
That makes sense. Good to know. All right. Did we have anything else on our list? I think maybe one more.
One last thing on the grant. Oh, I got two things. One
Oh,
on loan, like available loan products and grants. We offer both REI and OFA. They're the exact same thing, just different institutions.
gotcha.
Down payment assistance.
Awesome.
You do not have to be a first-time home buyer.
Okay.
A lot of people just think, hey, I have to be a first-time home buyer to get grant funds for down payment assistance. You do not.
Okay.
DPAs are available to anyone. In fact, with OFA, you can still even own a current home.
I did not know that.
We closed one that they sold at like 2, and then bought the new house with OFA at like 3 simultaneous.
That's awesome. Okay.
Yeah, so you do not have to be a first-time home buyer. Big misconception.
Okay.
Another misconception was obviously the FHA versus conventional. We now know Both are great. It's just which better for the client in the certain scenario.
Right.
Starting January 1st, this is big news. I'm going to actually look on my screen, my cheat sheet here. Starting on January 1st, the income limits are increasing.
Okay.
So currently, conventional loans up until December 31st, the maximum amount a person can borrow without being jumbo is 510, 400.
Okay.
And effective January 1st, that number is going all the way up to 548,250.
Oh, wow.
So
Okay.
opens up some more buying power.
Yeah, a big jump.
Absolutely. Absolutely. Especially when I got into business, it was like 510 or
Oh, wow.
410. So it's gone up quite a bit in a short period of time.
That's awesome.
And then that'll take FHA. So FHA will be going all the way up to 356, 362.
Oh,
So
awesome.
these are really good. I mean, for our industry,
Yeah.
that's a big movement
Awesome.
for us. That really opens up some buying power and maybe some neighborhoods and price points that weren't available then. So, or
Right.
in 2020. So 2021, I think we're going to see some really cool movement as far as the purchase, the buying and selling sector goes, for sure.
Awesome. I hope so. Hopefully everything will just kind of be way better in 2021.
The economists are saying so as far as the
Yeah.
mortgage guys go. So we think we're going to see rates remain low through at least Q1, Q2. When I say remain low, I'm going to say sub 3.
That's
I won't.
great.
I won't pick a number, but we'll say sub 3. Anything outside that, I feel confident it will remain low through 2021 entirely. But you get through Q1 through Q2, you're just basically spin a wheel and just say yay or nay because it's as big a guess as anybody.
Yeah.
Also, we also think we're going to continue to see the housing market stay incredibly hot. So we're going to see the home buyers. Right now I think a cycle's kind of coming to a close, get through the holiday season. But I think in the spring you're going to see a lot of inventory open back
Yeah.
up, a lot of buyers get back out, especially as we see this. Hopefully, fingers crossed, this buyers come maybe find some kind of solution to it.
Right.
I think it's going to be really fun in 2021.
Yeah, I'm looking forward to it. I've got a lot of people already, talking about making moves. So
Yeah.
I see evidence of what you're speaking of. So that's exciting. Well, I think that is all we have, isn't it? Is there anything
Yeah,
else to
no,
add?
I think we nailed this thing pretty good here. I love the list.
I know. It's to keep me on task because I could just start
It's
rambling real
it's
bad.
incredible. But thank you so much for letting me do this and be a
Yeah,
part of
thank
this. This is
you.
really cool.
Thank you for tuning in with me. And like I said, I just hope that this kind of can help people, feel more comfortable with the lending process and lenders themselves, just because I know that it can be a little bit scary because it's a big bank and, it's just
Oh yeah,
scary if it's your first time dealing with it. And
sure.
hoping that this can kind of open the eyes that you're not so
We're not
scary.
so bad after all.
You're not so scary. But I really appreciate you coming on. I hope you have a great Monday and Merry Christmas and Happy New Year.
Absolutely. Merry Christmas. We'll talk soon.
All right. Bye-bye.
See ya. Bye bye.